You are looking. Let's get this music down. Here we go. Here we go. Here we go. All right, March 2nd. Let's turn this down. You are looking live. It's Rob and Maria from the trading desk. Actually, it's just Rob today. We're going to be talking about trading. We're going to be talking about Crazy Ivans. We're going to talk about 30,000 SPX 0dte trades that we do every single year. This, however, is not one of those days. If you follow me in the Discord, you know that I did not put on any SPX trades today. We're going to talk a little bit about that, and we're also going to talk about Crazy Ivans. This is an interactive show. It is a safe space. We love to have people in the chat room, especially today, because we're not going to have any live trades. Actually, we're going to have a couple of live trades. I'm going to try and put one on manually just to show you what it's like to try and put on one of these bad boys manually a little bit later on. So get your questions ready. Well, another thing I want to tell you is that today is, today would have been day 104. We've done 103 days of trading since October 1st. And so I do want to go over that a little bit. Before I do, let's just take a quick look-see and see what this market is doing. I want to take off all these trades, all these darn things here. Just give me one moment, and we're going to go over to, let's go over and take a look-see at the Tasty Trade platform. This is my personal account. Where the heck are these trades? We want to find them. If you don't have the trades on the chart, it's no fun. Here they are. Look at them sneaking in here. There they are. All right, let's take a look-see at these. We will go ahead and put some trades on live here as we get going into this thing. Here is my personal account for today. It looks like I'm up about, $1,800 today. And this is because the Qs are down 34 bucks. These are Crazy Ivans that we put on. I did not like the way this market was looking because I was afraid it was too news-driven today. And I don't like a news-driven market. When you're selling 0dte's SPXs, news-driven market is not ideal because it can be up and down, up and down. And just to tell you, just so we can take a look and see whether I was right or wrong, is that if you look at this market today, I think what you discover is that this is the classic M&M, right? M, 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 M. So what happens is you get wiped out on the call side, you get wiped out on the put side. You get wiped out on the call side, you get a little dink on the put side. You get wiped out on the call side, you get wiped out on the put side. You get wiped out on the call side, and then you're going along pretty good. And then all of a sudden, boom, you might get pushed out here on the put side. You're going to get some calls that are going to get taken out here. And look at this, you're going to get slaughtered again. You know, if you're in the chat room, let me know if you did SPX today. I would love to know how you did. I don't think it's going to be very good. I'm going to back test this tonight just to see where I would have been, woulda, coulda, shoulda. But I am quite comfortable not trading and taking risk off the table. There's no reason to take risk when you don't need to. I see Lewis in the chat room, and I see Mario in the chat room. And I see we've got a lot of people in the chat that are just not saying anything. Feel free to come online. We are going to put on some trades. And first of all, let's do this. Let's take a look at these Crazy Ivans. These are Crazy Ivans. These are 0dte, These are naked puts that I put on. Let's just see so you can see what we've got here. These, look, I was scalping some small Qs today, so just for fun because I was bored. So let's take a look at these darn things and see what we've done here the last 7 days. So here we go. So I don't know if you can, how far down you can see. My mouse goes down right to there. So we're going to make this so you can see it all. Okay, there you go. Okay. So as you can see, the last 7 days, what I've done is I was selling to open some of these in the 200s, a bunch of these. Then I started selling them in 137, 136, 135. So buying them at 200, sell them at 137. That's pretty good. There's Porsche Guy. There's Rich Mac. There's PPAG. There's Maria. Hey, Maria's in there. So Porsche Guy is Tyler, for those of you who don't know. He's the one that taught me how to scalp many, many, many years ago. So then I was buying to open some of these Qs, and then I was selling to open some of these. I guess I was scalping some of those. Then I was buying to close. So I was buying in the 200s and selling in the hundreds. I was selling in the 200s and then buying them back in the 100s, 50% profit. And then I was selling to open on the 26th for 200, and again in the 200s, in the 200s, in the 200s. And last night when everything went crazy at 631, I was selling at 220. And the way Crazy Ivan works is you say, okay, I'm going to sell it at 220, which is more than what they're asking, a lot more. But I say, it's a lot more than what they're willing to pay. I say, hey, if you're crazy enough to take me, you're offering 200, you're crazy enough to take me at 220, fine, I'll get a fill. Then 230, I'll take a fill. If you're crazy enough to do 240, fine, I'll take a fill. Bam, 240 at 1:48 in the morning. I'm sound asleep. Then I got another one out there at 260, like the super Crazy Ivan. If you are insane enough to pay me 260, I'll take that. Boom, they took it at 3 o'clock and 24 seconds in the morning. So, okay, so those are paying off pretty sweet. And I mix those in for the couple of the other ones. So normally I would take these off at 25% profit. I like to get 50% on these right now because I think we are looking for a pretty big upswing in the market. I know you're not supposed to do that. There's Monkey See, Monkey Do, and there's Pacertron in there. Everyone's saying hello. Slaughter's a good script. I should have skipped today. Oh, sorry to hear that, Rich. Yeah, I posted in the Discord that I didn't like this. I probably should have done a video on it. But if you guys just, you can go in the Discord, you can make it so it makes a notification if I post anything. And that is probably, I'd usually post it in the general tab in the Discord so that you can, see exactly what it is that I'm doing. The ODT was up 2,000, but after 230 now I'm pretty much break even. There's Eric. All right, Eric. Well, that makes me feel a little bit better. Again, my situation is a little bit different. We've done it so good, which brings me to a natural thing. I want to talk about the top 100 days, but I just want to go over real quickly for those of you that are new to the channel. Maria and I, we give all of our trades out every single weekend on Sunday at 6 p.m., okay? So this is the show. We did it yesterday. I changed the title on it so you can see. We trade 0dte SPX. All of our trades are picked by AI. It's all AI generated. They're all traded by bots. We trade them all automatically. We don't do any of it. It's all based on millions and millions of back tests that we do every single week. So this week, I think we did about 4 million back tests. So we back tested 4 million trades, and we looked for different premium amounts, missed different times. There's 390 1-minute entries in the day. We looked at different premiums, $1, $1.50, $3, $2, whatever, $5. We looked at different stop losses where it might be 95%, 100, 105, 150, 200, 500, whatever it might be. Then we also looked at different wing widths, right? 5, 10, 20, 100, 200, 150, whatever it might be. And so we came up with what we think are the best ones. We ran it through AI. She gives us, she analyzes them. We look at compound annual growth rate. We look at profit and loss. We look at max drawdown. We look at the MAR. We look at the Sorrentino. We have a couple of other metrics the Sharpe ratio. We look at a lot of things, including some of our own metrics. We use AI. We use Vera, which is our AI assistant that Maria took about 9 months to build. And like I said, all the back tests, those are going to take us about 11 hours every single weekend to do. It used to take us 22, so we've gotten it down. And then it takes us another 3 or 4 hours to schedule the bots. As I said, we do only 2 of them. We have a $1 million account that we trade live and a $30,000 account that we trade live. And both of them will do multiple entry iron condors or exponential moving averages, okay? Now, since October 1st, this was as of Sunday, we did 151 calendar days. We did 101 trading days. We did, 15,000 trades. Yeah, that's not a typo, 15,000 trades. And remember, don't just copy our trades. Our lawyers want you to know this is for education purposes only. It's only for entertainment. We do different trades than we post. We do more trades. We do the trades that we post, but we do additional trades. We reserve the right to change those trades or to not trade at all, like today. Our risk tolerance is for different years. Buying power is different. Product mix will vary. Having said that, this is the fun slide everybody likes to look at. So since October 1st, you can see October 1st to March 1st, we made $427,000 in a $1 million account. We sold $4.3 million in premium. We captured about 10%, and then we made 15,053 trades. What I'm most proud of here is the constant rise up, right? The constant rise up. And you say, well, you can't mirror that in a small account. Boom, here's the small account, $30,000 account, 6 trades a day, okay? It's up $13,000, about the same rate of return. We sold $250,000 worth of premium from October 1st to March 1st. We captured 5.2%. We made 2,701 trades. Think about that. $30,000 account. We made 2,701 trades. And again, one of the things I'm most proud of is it's pretty steady, constant up. We get some motion up and down, and Maria and Tyler will come to me and say, "Are you sure the math works?" But it does work when you look at it. I mean, look, here's the big account, small account. $427,000 on $1 million, 13,000 on 30,000. So it's pretty straightforward. If you didn't see them, these are the entry times we're putting in. I'll be putting these in tomorrow, unless we decide to stay out of it. Based on what Trump said today, I'm pretty confident we're going to go in tomorrow. So in the small account, these are the trades by time. These are the trades by profit and loss. Yes, I go quickly. You can stop it. You can back it up. You can screen capture it. You can get these. You can watch our video that's posted. This is the first number is obviously the time. Then the premium, this is on the stops, right? So it's on the short premium and on the long, it's on the shorts. The short put and the short call are each $3 each, right? That's the target premium that we're trying to get. It's a multiple entry iron condor. If it's M, if it's E, it's exponential moving average. We use the 20 versus the 40. 95 is the stop loss and the 50 is the wing width. Here's the top 20 trades for the $1 million account. The same protocol, same naming convention. The premium goes first in multiple entry iron condor or exponential moving average. That stop loss, the wing width, the time it goes on, profit targets are all 0. And again, the time. And here they are by P&L. If you want to know, you say, I don't want to put them all on. We're going to put on about 120 a day, maybe 150 in the big account, okay? And then we always said a little thing about subscribe and Discord. Let's put this on the fun part because I love looking at this. I just can't get enough of it. Aren't I a terrible person? I'm a terrible person, I know. What can I tell you? All right, let's look at Tasty Trade. All right, so what are we doing here? We haven't come green yet. This has come around. Let's go ahead. It's a trading show. Let's do some trading. Let's go ahead, and I'm going to close this position at 50% profit. We may not get it today, but let's just go ahead and put that on, and we're going to boom out there, and boom, there's that trade is going on. So we're going to close this bad boy at 50% profit. So we're willing to pay 107. They're asking 133, but the day's not over. Look, it's absolutely flat. Now we're going green. So, this goes 30 points green. We're probably going to get a fill. So someone might say, well, how do you do these, Rob? Very simple. I've done them the same way for 6 years. I used to put them on every single day at 10:30, regardless rain or shine. Now I like to see a down day before I put them on, but it's very simple. 45 to 60 days out. So here's 46 or 59. How do I pick which one? I don't know. Just kind of wing it. And I'm going to go 12 delta, right? So 45 to 60 days, 12 delta, go down here, 12 delta, boom. And you can see these are the ones where I put on. I like to go on the 250s, the 500. I don't know if you can see my little arrow, the 250s, the 500s, the 750s, or the thousands. A lot of people say, why do you repeat the same thing every day? Why? Because this is the trade that works. This is a trade where I've made money for years. Look, I was an attorney. I started a bunch of internet companies. I drew those companies. I took them public for over $250 million. I managed money all my life, right? I retired when I was 42. I've been trading ever since. These are the two systems. For years, it's only been the naked Qs that I did. I did some strangles and stuff, but not much. And then I started doing SPX only because I had all this extra buying power. So these are the ones that are tried and true. These are the ones that I show you about. I don't charge you for anything on this channel. All I ask is that you subscribe, that you like, that you comment in the chat room. Those are the things that drive the YouTube to help, get us out there. So, okay. So I'm going to look for the thousands, the 250s, the 500s, the 750s, and I'm going to sell, which is red, right? I'm going to go down here, and they're going to say, well, we're going to offer you $174 credit. I'm going to say, no. I want more than that. Maria says, go up, not 175.50, go up 2. So I'll go 189. I'll put in 189. I'll put in 50 cents for the dog, right? For Barbie, our dog. And then I will hit review and send, and boom. It's a trading show. Let's freaking trade. There's a trade. So there, I've got one I'm trying to buy to close, and then this one because it's different. Notice that these are the H6s and these are the M6s. Those are completely different products. When you're trading futures, it is different. It's not like when you're trading Microsoft, and Microsoft is Microsoft, and Microsoft options are Microsoft options. That's not true. The HQ and the MQ are different. There are 8 of these every single year. Those are different products with different prices. How can I tell the price, you might ask? Well, I'm glad you asked. If you don't know the prices, you can go on Tasty Trade, and it tells you what is the current price for the HQs. The price is $24,989. For the MQs, the price is 25,212. That's a difference of like $200. And then down here, these crazy ones out here, 199 days, are way more expensive. So, okay, let's take a look before I go any further. Okay, what do you do to close these things, Rob? What happens if they go against you? If they go against me, it's very simple. What I'll do is I'll roll it down and out, which means I'm going to go ahead and I'm going to close. I'm going to buy these back and I'm going to sell them. Excuse me. Let's just take this. We take a position. Let's say we're going to roll these right here. Okay, I want to find ones that are close here. I'm going to roll. Let's suppose I got to close this out. Let me show you how I would roll this. I would roll this by saying roll expirations. I'm going to roll. I like to roll out 60 days if I can. Right now it's at 17 days. It can only take me to 39 days. That's okay. And what I'm going to do is I'm going to say, 39 days, it'll take me to 23,250. No, you notice here it's giving me a credit. So what I'm going to do is I'm going to take this, I'm going to start moving it and watch this credit. Notice the credit keeps getting smaller, smaller, smaller. Boom, 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 boom. And there it is, 850 debit. No, I want a credit. There it gives me 10. The slowest credit is right here. And what would happen? I would be rolling this from March 20th to April 10th, and I'd be rolling it from 23,250. I'd be rolling it down 1,000 points. So get it. You get it, right? It's down 1,000 points, and it's out from 17 days to 39 days. You say, man, I'd like to have a few more days. I'd like to get 60 days. Let's see if we can get this out to 76 days, right? There, 74 days. All right, now we're going to have some fun because look at the credit I'm getting, some humongous credit. So let's keep moving it. Boop, 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 boop. Nope, that's $50 credit. No, I want more. Boop, 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 right there. All right, so now what are we doing? Now we're going from 23,250 down to 20,250. That is a movement of 3,000 points down. That's how you move it. So if the market moves within 250 points of my strike, of my original 23,250, it got down to 23,500, I would roll this down and out, and I would roll it 3,000 points or whatever it is. I would try to go out 74, another 60 days. That's what I try and do. Last year, I rolled two of them. Both of them, I was able to close about 10 days later when the market came back, which is typically what happens. Remember, in COVID, it only was, down for 22 days, and it came back. It was a 10% profit after 45 days. So, all right. So let's see what we got here from Maria. Post how much you've made if you follow us. How many crazy Ivans? How many do you do? Oh, okay. She's posting some stuff from the chat room. All right. So I will do that. Let's take a look. So how many crazy Ivans have I done? Well, it's hard to show that on here. I will have to get you the figure on that, but I will tell you that here's the way it works. They routinely, I close them at 25% profit, or at least I'm supposed to, right? And that takes, if you close them at 25%, it's going to take you about 14 days, all right? So you're putting these on, and they're going on for, what did we say? 15,000, something like that. Let's take a look here. 46, and we're going to go out for, let's take a look at these. Let's find a nice juicy one. So let's say we went out 46 days. All right. We're going to go out to 12 delta, and we're going to go here at the 2,300. No, I don't like 22.3. No, I want to go 22.5. So it's going to cost us $14,000 worth of buying power. We're going to get $3,400. Maybe that's because it's a little close in. Let's just go one more. Let's go one more. There we go. So now we're going to be at, let's get this to 12 delta. Boom, right there. Okay. So it's going to be $14,000 in buying power. We're going to get $4,000 worth of credit. So that's $1,000 profit if you close them at 25%. And if you can do that 26 times a year, that's going to be $26,000 profit on 14,000 of them. Let's suppose that two of them, you're going to have to roll them down and out. And when you do that, suppose it costs you 4 or 3 credits. You're going to make somewhere in the range of $16,000 on 14,000, over 100% rate of return. I've done it 6 years in a row. It pays the bills. I love these things. The only thing is you got to have a lot of buying power. I get it. Not everybody has that much buying power. I know. You can also do the MNQ, right? You can also do the /MNQ. The only problem there is it's going to be a little bit more in commissions and fees as a percentage of what profit you're making. But it's pretty much the same game, right? We're going to go down here to, it should be about 1/10, right? So we're going to go down to 12 delta, boom, boom, there we go. And it's going to cost you $1,400 worth of buying power. You're going to get $353. And if you put this on, it's going to cost you, what is it? 75 cents plus 52 cents in fees, 75 cents in commissions. So about $1.50. But still, it's not that much. It's a little bit more than if you, as a percentage, if you were doing them for the big boys, for the NQs. Okay. All right. So now let me get to some of the questions in here. Good afternoon, says Monkey See Monkey Do. Pacertron, I did 0T. It was up 2,000, but after 239, I'm pretty much break even. All right, bummer. Hedging Crazy Ivans with VIX Futures. Thoughts? Love your show. Murillo, a Brazilian living in South Carolina. Very good. Marie and I live in Daytona Beach, so does Tyler. We love it here. Great weather, zero taxes, and you live on the beach. I mean, I love it. I can't get any better. I'm born and raised in Iowa. So, we have 2 seasons. We got winter and road construction. And so I'm like, my former life, I probably was a plant. I just love warm weather and humidity. So what delta would the NQ at 260 be? Seems like you would be much higher than the 12 delta. At what delta would the NQ at 260 be? At 260, I don't know. What I would do, like I said, is, let's clear this order off. If I was doing the Qs right now, let's say I was going to do it, I would go 46 delta, and I would go out to, 46 days, I would go 12 delta, and this is what I would be putting on. So I am not exactly sure what that question is. At what delta would the NQ be at 260? I don't know where you mean by 260, but I always do this on the 250s, okay? 250. What's the time check here? 3:47. All right, 3:51. I'm going to trade live on the SPX just for fun. Hope today's a big green day. Well, Sandfax, unfortunately, I did not trade today. I did not like the problems that were politically motivated. Basically, I call this a news day where, when the market can be affected a lot by news, you don't have any control over news. It's not predictable. I don't like to trade on those days. So, there's no harm. No trade day is better than a losing day, right? And we can control the no trade days. So remember what I always say, the market takes money from the impatient people and it moves it to the patient people. And every day you get to decide which you're going to be. It takes money from the impatient people that can't wait. They're in a hurry. And it takes it and gives money to the patient people. We're the patient people, okay? The other thing we always remember, the simple way I describe the 0DTEs is there's a herd of sellers, okay? They're a bunch of sheep. They all go together and they sell over here. If they sell over here, we want to sell over there, right? If the sheep are over here, we want to sell over there. If they're over here selling there's so many of them, they can only get $1 per contract. Heck, if we're over here, we can get $2 per contract. That's what we like. We want to get paid more. That's all. That's all we're doing. That's all we're looking for. And so the only reason we backtest millions of trades is just to find out where are the sheep. And that's why we backtest every week. We go back only 6 months. We just want to know where they've been 6 months. Why 6 months? Because there's 250 trading days in a year. There's 125 trading days in 6 months. In order to be statistically relevant, you need to have over 100. I can go through the math with you, but just trust me on this. You need to have at least 100 instances. I like to have 125. Call me crazy, but I like to be super, super, super conservative. So that's why I do it the way that I do it. I also don't like the fact that people are copying us. I understand that you're going to do that, but my goal is to teach you how to do it yourself. We have a 5-part series. There, that's it. That's part of the series. Look for that color up there. That's chapter 3. It's a 5-part series. Each part is 10 minutes. It's short. Shows you exactly what we do, how we do it. We use Options Omega to do the back test. We use Options Omega to do the bots, and we use ChatGPT, the Vera that Maria built to do the manipulation of the trade logs from the back testing. But you can build that yourself depending on whatever metrics you find relevant. I like to look at compound annual growth rate versus the max drawdown, and that gives you the MAR. All right, let's go back to these questions. I did a 0DT. When you backtest a 0DT SPX, do you test an iron condor or each side separately? We test each side separately because that's the way we put them on, okay? And the way it works with Options Omega, and what I really like about Options Omega is that Options Omega will let you take a back test and you can push a button and make a little adjustments and it turns it into a robot. So a lot of other places are either back testing and or bots, but their back testing is very rudimentary. Options Omega is very, very, very detailed to the nano bit, right? To the nano bit. And so I like that a lot. If you're interested, by the way, we give you a 50% coupon for Options Omega. It's down below. They give us $15 for everybody who uses it. We use that $15 to buy treats and toys for our dog Barbie. And Tasty Trade has a link down below. If you use that to sign up, they give us $125, and that's such a lot of money. That's a lot of treats and toys for Barbie. So we give that to the Humane Society, help dogs and cats and pets. So if you want to help save dogs and cats and pets, use our Tasty Trade link below. Okay, that's the end of the commercial for today. Let's go back to Tasty Trade. Let's see exactly what's going on in this market. This is the Qs. I don't want that. I want the SPX. All right, we're at 351. Oh, geez, let's get a trade on here. Come on. Why are you guys, what was all this mess? All right, we want positions. All right, we want to show the SPX. We want to trade the 0dte. Let's see what we're going to do here. Let's do, which way is the market moving? It is moving to the upside. So let's go ahead and sell some on the put side and egads. All right, so we want to sell this and we want to go down to the first nickel, which is right here. And boom, let's sell ourselves a, let's make it interesting, right? Let's do 4 of them. Let's see if we can get 145. Let's see if we can get 160 cents. Boom. And there we go. Let's see if we can get a fill. This is how you do it manually, by the way, kids. That ain't going to work. Let's replace this order. 125 now. Look at it go down. Boop, boop, boop. How about 135? And doom. And let's see. There we go. Boom. Jackpot. All right. We are now in the game. How about that? Now we're going to have a little bit of fun. This is great. By the way, don't get excited when you trade. This is purely math. We don't care. We don't care. We trade small. We trade often. Don't get involved in math. What you're about to watch for the next 9 minutes shouldn't be what you do not do. Okay? Let's go back. Woohoo! All right, this is a different Rob over here. Now we're going to have some fun. What's my number? Somebody tell me, where are we in at here? We are in at 68.79, 68.75, and we sold puts. So we want to stay above 68.75, 68.75. We want to stay above 68.75. That one doesn't matter. 68.75 is right. Boom, there. Let's take this one out. All right, so now we're gonna remove this one. Boom. And now can everybody see that okay? All right, so here we go. All right, so here we go. What else did I have in the chat room? On a lighter note, want to know the secret to make $1 million day trading? Start with $2 million in your trading account. Yeah. There's a great series in England that talks about that kind of stuff. Very funny. I forget the name of it off the top of my head. It's with Moss. I forget the guy's name, but very funny actors. Okay, look at this. All right. This is easy money. Anybody that told you you cannot trade at the end of the day, the last 9 minutes and make money, they don't know what they're talking about. I don't want to get mad at people, but look, I started today trying to tell you guys about the first 100 days. I'm doing a video on it, so I just want to give you some of the information on it. Let me pull it up on a screen over here so I can talk to you about while we're waiting. Some interesting things, right? Okay, let's get this off so we can see where we are. All right, here we are. We just want this thing to stay above this number. And then we were winning. And how many did we put on? We put on 4 of them at $1.50. What's 4 times $1.50? $600. It's not life or death, but you know what? It'll pay for dinner. It'll give Barbie some treats, and at least it's a little bit exciting. And by the way, if you don't drink apple cider vinegar in your lemon iced tea every day, there's something wrong with you. Apple cider vinegar, it's great. You know, we go to now for your commercial. Apple cider vinegar, it's great in your iced tea. Hard to believe I'm a trader, huh? And successful once in a while. All right, now commercial's over. Look at this thing go to the upside. Are you kidding me? Are you kidding me? Oh, man, I love this. Give me a time check, 15:55. Give me a time check on this thing. You know what? If I just do this a little bit more like this, I bet you I can get the clock in there. There we go. How about that? Look at that. Look at me. All right. We want this thing to stay, for those of you, we want this thing to stay over this number right here, right? No, we want it to be over this. Look at this. Look at this. Here's the problem, guys. We've got those, market on close, MOC orders that come in. There's a lot of funds that will close at the market price on the close. So on Q's picking delta, we also look and try Oh, that's Maria. And for the end of month and one of the most, what has the most interest, yes. You sold an NQ for 260. At what delta would that be? That occurred last night. Okay. Yeah, last night, what I did is I put in, no, those were all at, I went to the 12 deltas, and the 12 deltas were selling for 170. So I put in 200. I said, you got to give me 200, 220, 240, and 260. So if by the time, you're right, by the time it got to 260, the delta would have been lower, but that's okay because then they're paying me so much money. I know that at 12 delta, it's going to move around, right? And as long as it's in a going down market, I just don't want to get in at 190 or 200 and then have the thing go to 260. I wake up in the morning and I'm down, $70. So I do want to layer into the darn thing. And rather than just buying 5 of them at 200, I'll put them out there at 200, 220, 240, 260, 280. I know I won't get them all filled, but as the market goes down, it'll pick them off, right? It picks them off and I'll average in. That's the game. And that is a very, very good, who asked that question? Robert did. Good for you, Robert. That's a great question. We call it an iron condor, but when you do automation, you actually make 2 different spreads, the put credit spread and then another automation for the call credit spread. That is 100% correct. That is 100% correct. That way also I get a much better feel. If you're trying, okay, for those of you that don't know, every order that's in the equities market that is cleared as an option goes through the Chicago Board of Exchange, the CBOE. The CBOE only accepts single-legged orders. And people say, well, I never do a single-legged order. I always do a put credit spread or a call credit spread or iron condor. Iron condor's got 4 legs, put credit spread's got 2, call credit spread's got 2. So how in the world am I getting those? Well, those are being held at the brokerage. So you Tasty Trade, Schwab, Fidelity, IBKR, you put in that order for a 2-legged trade, it cannot go to the CBOE. It has to go to the broker. And what the broker does is it monitors the price. And remember, there's 10,000 milliseconds in a second, and then they're constantly changing that price, 10,000 times a second. That's why time really matters, right? So what happens is those 2 and 4 bangers are there, and they're trying to figure out, the broker's trying to figure out 4 legs, you want, $6, how am I got to get this to be $6? And sometimes they'll do like the put credit spread is $4.50 and the call credit spread is $1.50. We don't want that because if the put gets punched out at $9 and you're only making $1.50 on the call, you're really going to be hosed. So we want to get them as balanced as possible, and we don't want the broker to be worried about it. So about trying to match up 4 orders. And there's a lot more slippage that way because they're moving around and they're willing to take crazy amounts in order to get the fill. So what we do is we do a put credit spread and a call credit spread. And then, yes, but you say, but Rob, those are 2 orders. Yes, they are. And we understand that. So we're going to put those through as 2 orders because we absolutely need to have the long has to be on there to lower the buying power. Otherwise, a naked put or naked call in SPX is $79,000. If you put in a 150 wide wing, it's only $15,000. If you put in a 50 wide wing, it's only $5,000. So if you have a smaller account, you put in closer. I know I talk fast. You can always slow this down and watch it again. All right. So now what do we do on the stops? Again, super important. Stop orders. If the market is crashing down, right? We got a stop market order that says we put it in at $2. We want a 100% stop loss, which is $4. If you don't understand that, watch our course. It explains it to you. So we want to do that stop loss at $4. All right. If that is at the broker and the market starts crashing down, it says $4. Whoa, send that over to the CBOE. They send in the order. CBOE says, hey, we filled you at $5 because all the $4 were gone. It would keep going. It just keeps going. The market doesn't care about you. It just keeps going, right? So what we do is we say, okay, Tasty Trade, Schwab, IBKR, Fidelity, we're going to put on a put credit spread or a call credit spread. And the shorts, we're look at me, a chatty Cathy. Hey, and we won. How about that? So dumb. I'm so dumb. I'm sitting here talking about these things, and I'm not even watching the freaking screen, right? All right, so at least we won. How about that? You know what? You know what's really dumb? Is I didn't put that on through Options Omega, so it's not going to show up on my chart. That's what's really dumb. So how'd we do? So we won $568. Yeah, that's pretty good. Nothing wrong with that. $568. It's going to pay for dinner, going to pay for some dog treats, pay for 1 new shoe if Maria's buying a pair of shoes. So that's what it pays for. So what was I talking about? Okay, so let's talk about something that's really important. Not the profit's not important. What's important is that when you put on this stop loss, you want to be sure that you put on just the short, okay? Just the short. So you're going to say, this is why we put on just a credit spread, and then on Options Omega, you can split you do to get a better fill than doing all 4 at once, right? You don't want to do 4, you just want to do 2. We put on put credit spread, call credit spread. So then what are we going to do? we are going to tell the broker, send in just a short, the stop loss on just a short to the CBOE. Why is that? Because CBOE can only take a single-legged order. Now we're in what's called the electronic book, and that's the order. First in time, first in right, but there's also special rules. In futures, there is no special rules. Everybody gets first in time, first in right. If you're on the CBOE, it's individual traders first and institutional traders. So you have an advantage, right? If you're a small trader, which, under whatever big number, and you have to trade less than 390 trades a day, and then for a month, there's a whole bunch of rules. But at any rate, we're all going to be. Excuse me, I got the itches. I guess when I win, I itch. So what we're going to do is we want to put it in at CBOE. So then, as it's crashing down, remember, milliseconds matter. Remember, I told you about that. Milliseconds matter. It's crashing down. It hits that $4. Boom. We're first in line. We get the first fill at 405, right? Now come the institutional orders, right? They're getting filled at 4 and a quarter, 450. And now Tasty Trade, IBKR, Fidelity, whatever, people that had the two-sided orders, they're saying, oh, they're trying to match the short and the long. They can match the short and the long. And where do they get that short filled? That short's filling at $5, $6, $7, right? So you're losing hundreds of dollars, all because of the way you put in your orders, okay? Look, we're fighting the big boys. This is a big boys game. I know you're not supposed to say boys anymore. It's a big person game, okay? Big funds. We're small. We got to fight them. We got to get in and get out. That's what we want to do. Get in and get out. So we don't want them to be messing with us, right? So you need to know the rules. It's 1,100 pages for the CBOE rules. People say, 1,100 pages is so boring. I like to read it once a month. It puts me to sleep. But if you don't read it, how do you know what the rules are, right? You got to know what the rules are. You got to know when the stops are. You got to know when they close down the market or when they close down a specific equity. There are certain rules, and some people say, well, I can lose so blah, 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 blah. I say, no, there are certain rules when they halt it. There are halts they put in. They'll stop the entire market if certain things happen. So people, you hear a bunch of stories also that are just not true on the internet. What's the best day to trade? What's the best time to trade? What's the best stop loss? What's the best premium? I'll bet you that if I tell you what they really are, at least for the last 100 days, you will be flabbergasted. You will all look at me and say, well, that's not what I heard. No, it's not what you've heard. Because listen very carefully when someone tells you, do this trade or do that trade. Look, I don't want to say anything negative about anybody. Do whatever trades you want. What works for them might work for you. That's great. If that really does work for them, that's great. But most people that tell you how to trade say, well, I've been trading this for a long time. The next question is, how long? Oh, 2 years. How often? Once a week. Okay, 2 years, once a week, that's 104 trades. Okay, how often has it been profitable? A lot. Okay, a lot's not a number. Give me a number. 80% of the time it's profitable. Great. And when it wins, how much does it win? $40. How much does it lose when it loses? $100. Say, well, did you ever do the math? No. Okay. So they're doing 120 trades and they're doing that over 2 years. What are we doing? We're looking, that's what they're looking at to make their determination. And it's very possible that they won in that particular time. We're looking at 7 million, 5 million, 3 million trades every single weekend, right? We're looking at millions of trades over 125 trading days. And we're looking very, very carefully, and not just the profit and loss, but the compound annual growth rate, the max drawdown, the MAR ratio, the Sorrentino, the Sharpe. We're looking at all these ratios to look at what truly is your risk and what is the reward for that risk. And that's what's really, really critical. It's something that I want you to think about. All right. Well, that's it for today. Wow, we got a lot of people hanging in there. I sure appreciate it. Let's take a look at any other questions. That should have been a question. Okay. I used your code for Option Mega yesterday for robots. There we go. Mario, my man. There's $15. I will get a set of treats, or Maria will, for Barbie, and she will love them. And we'll say, Barbie, these are from Mario. The stop loss is great info. I was confused because I'm linked to Tasty and it doesn't show the OTO. Okay, stop right there. OTO is something completely different. Okay. OTO means one triggers the other. And it's a great question. Who asked that question? Michael Mitchell at 55384. All right. So OTO, what that means is one triggers the other. So that means it just applies to the long, not to the short. So what happens is, let's say we put the short over to the CBOE and it goes down there and boom, we get taken out. Okay. Now we still got this long hanging over at Tasty Trade, right? We got that long. It's sitting over there. And we're like, what are we going to do with this long? It's over here somewhere. I'll tell you what we're going to do. We're going to sell it. And it might be selling it for a nickel. Remember, a nickel is $5, and we're going to pay maybe 70, 80 cents in commission. We're still going to net $4. $4, hey, that's a dog treat for Barbie, right? And let's say that you're doing, I don't know, 200, to pick a number, 200 trades a day, and say that only 50 of them you can get $4. Somebody tell me what's $4 times 50. I'm going to say it's a lot of money. It's a lot of freaking dog treats, that's for sure. It's even part of a pair of shoes for Maria. And if you do that 125 days or 250 trading days of the year, it's a boatload of money, right? So what we do is we have to do them manually in Tasty because they only do 4 OTOs a year. In Schwab, it's unlimited. What is OTO? OTO says, as soon as that short, it says Schwab, as soon as that short gets stopped out, I want you to sell the long. Get as much as you can for it. I'll take the market. Anything you can get, $5, $10, I don't care. If you give me $5, and the nickel's as small as it goes, give me the $5. If you don't give me the $5, put it in a market order. If the market ever keeps going that direction, you get me the nickel. Great. I love that. And especially if you're doing the small account, I can't tell you how many times I see those OT orders. They're getting $50, right? So they're getting punched out and they're losing $200, but they're getting $50 on the long, right? Well, that changes the math dramatically. That's fantastic. So you always want to be sure you have OTOs. There's a lot to this, okay? I like to say it's like chess. I can teach you how to play chess in 30 minutes. I will never be able to teach you how to master chess because I can't. I've been playing it my whole life, and I'm not a master. I'm far from it, far from it. Likewise with trading, I can teach you how to do a crazy Ivan. I can teach you how to do a multiple entry iron condor. I can teach you how to do an exponential moving average. But what I cannot teach you is how to master it, right? So come watch me do it at 325 every day. Hopefully days will be, trading 200 trades a day. You can see how we do it. Come join me Sunday at 6. You'll see exactly what trades I'm putting on. You can follow along and see how we do it. Next question. The stop loss is great info. Okay. Winner, chicken dinner. Great show. Yes, sir. Thank you. I see Cleaver Customer Performance. That's a new person. Brian Thompson, I think you're new. Robert's in there. Dojo, DJO, Mario, Michael, Robert. The more you're in there, the more I say your name. Monkey, see monkey do. Sandbags. I wish I had a better name in here. But it's Mando, Jeju, Eric, Pacer. I'm terrible with names. But we sure appreciate it, guys and gals. We love it. Trade with your spouse. Be honest with them. Be sure and tell them when you win. Be sure and tell them when you lose. Have them come watch on Sunday night. Maria's in here. And, Maria, although she was a banker and is very comfortable with numbers, she was not comfortable with trading, and she's become truly, truly an expert. She's a better trader. There she is right there. She's a better trader than I am, for sure. And our relationship has never been closer as a result of being able to trade together. By the same token, we're kind of a one-trick pony. We don't have much else to talk about after all these years of being married, but it's great. For those of you guys that are married, you know what I'm talking about. It does give you something to talk about, and I'm sure this comment will give her more to talk about. All right, let's see what else we got. Let's see, bring Big Green. Let's see what else. Am I got everybody? I think I do. Thank you guys very, very much. This was the most views that we've ever had by double. And we didn't even do any live, just a very little bit of live trading. We're going to go get them again tomorrow. Go into our Discord. Tell me what you want me to cover on this show. I'll be glad to cover it. You guys have a great trading day. Say goodbye, Maria.